Trump on the campaign trail yesterday was so incredibly confident that he was going to pull off the political upset of the century that he said he will one-up the UK voters who decided to leave the EU back in June. Listen to what he said.
I think it's going to be a Brexit plus, plus, plus. Does that make sense?
The Brexit vote set off a two-day, in case you didn't remember, a two-day 871-point sell-off on the Dow Jones Industrial. So here's our question. Investors looking at a swan dive tomorrow, depending on tonight's outcome, what should they expect even if Hillary becomes president? Bill Lee is head of North American economics at Citigroup. He's joining us now with I guess, your specific outlook, which isn't necessarily like everybody else's. Bill, what do you think happens here?
We've been warning everybody that don't be overconfident, because financial market guys tend to think they're smarter than the average guy, and they always want to get ahead of everybody else. So what you've seen the last few days is growing confidence in that Hillary outcome. We've been warning it could well be that the Brexit black swan could take place, or at least more uncertainty. And if that were the case, no one's prepared for it. Everyone's positioned for a Hillary victory, and that's something we're cautioning people about. Because we could have an equity market sell-off, we could have corporate spreads widening, and we could have rates go much higher than they are.
Well, not that there's a lot of time that people can do things, at least here. We got about a minute and a half before the closing bell rings. But what are you advising your investors at Citi?
What we've done all along is to say hedges are cheap, put some hedges on. Make sure that you're prepared for the uncertainty of a sudden market event, but look beyond that market event, that immediate reaction, because that's not correlated with where the market's going to be at the end of the year. The key thing would be, what are the economic policies each candidate has in play, and what do you think is going to actually get through? And right now, there's a lot of uncertainty about both candidates being able to put in place the kind of stuff they're advocating.
But in the end, Bill, don't all roads lead to the Fed? December 16th is the next Fed announcement. Isn't that what controls the markets?
You know, a lot of that is the Fed, and the Fed right now is determined to raise rates in December. In fact, if they don't raise rates in December, I would start battening down the hatches and start digging some trenches, because that means something has happened to the economy. Either the level of uncertainty about the winner's policies are going to be so great that they said, wow, we've got to wait until we see what happens. That is not a good sign, because uncertainty is the one villain that hits both sides. No one in the market wants uncertainty.
Hey, Bill, it's great to have you. Thank you so much on a most important day. Bill Lee of Citigroup, folks.